All right, so let's go ahead and get started. So let's look at some basic currency pairs. Let's start with, actually I don't want to look at USD. Let's look at AUD USD. All right, let's start here. So with AUD USD, obviously if we go out to the higher time frames, like the daily chart, you can see that we have some monthly resistance I'm running into right now. I like to label my charts and keep them labeled. That way I don't have to go back and mark these things up time and time again. It's super important to keep these labels on your charts. I know the last video that we did, we went over the importance of these labels and all that other stuff. Everyone does things differently for sure, but yeah, so if you guys want to, I'll actually go through a very quick video, or not video, we're on a live call, but I'll go through and actually show you guys how I like to find my key levels and all that other stuff. So take some notes. All right, so let's go ahead and do this thing. Let's start with, you know what? We'll use AUD USD as an example. I'm gonna sacrifice this chart, which I can't believe I'm about to do. I'm literally about to delete this chart, which I never do, just to teach you guys. So I hope y'all are welcome. More drawing tools. Oh man, that hurts to do. All right. So what I like to do is I like to find the monthly and the weekly levels. So really pay attention to what I'm about to teach you guys, because this is about to be some major key stuff. All right. So we're looking at AUD USD, and the first thing you want to do always whenever you come to a blank chart is you start on the monthly chart. You should never start lower than that. You shouldn't look at the 1 hour, nothing. If you don't have the monthly charts marked up, then you're not going to have a very high success rate with your trading. So first thing you want to do is you want to find where the market is ranging, okay? So let me give you an example, all right? So when we look at the monthly chart, this right here is a perfect example of the market ranging in a certain area. Y'all see that? See how this was months on end where the market was just back and forth in this box and could not break it before it really ended up breaking out? So that would be one example. I'm going to use a different example that I actually know for a fact. So this right here, see this range, this monthly range? This is a monthly range that I'm paying attention to. This was a point where the market was trapped in this area. So I'm going to use that area as the starting point for marking off my key levels because it's closer to the actual live market price. So if I zoom in, let me actually get this zoomed in for you guys. Okay. So this is where we're looking, and you can see that right around this area at the top, right around here, but where both those candles are in play, not up here where it's like 82 and all that other stuff, just right where they're kind of like the average area of where it's at, right? It's going to be about 80, all right? 81, 80, somewhere in there. So what I'm going to do is I'm going to round this, because if you guys, what you guys need to understand is that monthly, this would be resistance, right? So monthly resistance and 0.8800, right? So, and then I'm going to change this to make it exactly that. Whoops, my bad. So you can see it's kind of in that area. And you can see also, if you look to the right, you'll notice that, hold on one sec. Let's not draw on the screen. I don't know how to like turn that off. But if you look to the right, you'll notice that monthly candles did not close above that area. So we do know that 0.80 is going to be our first area of monthly resistance, okay? So the second is you want to find where monthly support from this given range that I was talking about is at. And I can see whenever I actually come in here, I know that 75, somewhere in there, 75, is going to be the monthly support area. 75, and then I'm going to put monthly support, obviously. And this is just how I like to do my stuff. You're not required to do it this way, but I am telling you that if you do it this way, it will change your life when it comes to trading. Like, I'm giving you guys the keys right now. So it's actually not 75. It's like 75,500. So that's what we'll do. Super, super important to have your accuracy on point. And notice how I'm putting these to rounded numbers in the general area of rounded numbers. That's because the market acts very, very psychological with these levels. These are your rounded off numbers. So for instance, if you guys are, if you have your debit card and you know that you're kind of in a rush and you need to put some gas in your car, you go to the gas pump and you purposely try to put $10, $15, $20, $25, numbers like that, right? You're not purposely going to go to the pump and go, oh, let me try to get it on $17.36. Like, nobody does that. Everyone tries to get it right there at those, like, psychological numbers, 20, 10, 30, all that stuff, right? So your monthly levels are typically going to be around those areas as well. So this is where it gets nuts. Okay, pay attention. So is what we did, just to recap, is we went based off of this monthly range right there. That's how we got these two monthly resistance and monthly support areas, and you can see how the market acted here. But now is what we're going to do is we're going to take a trend line and we're going to draw it from the top to the bottom of this area. And is what that's going to do is that gives us, this is the length of that range, right? So watch this. If we actually draw it right here, if we drop it below, make sure that it's perfect pretty much, and we take a horizontal line and we just put it down here, is what that does is that shows you where your next low monthly support should be, which in this case, we round it up, is going to be 71. So just like that. And then we're going to put 7,100. So, okay, so everyone following? And then is what we'll do is we'll find the next monthly resistance area, which we'll do by this. And we'll drop that right there, okay? And that's going to be monthly resistance. And that's going to be around 84,500, okay? 84,500. And going to do that here. Sorry if this is like taking a long time. This is why I typically don't teach this, but I figured tonight, why not? Since I'm recording it anyways. So after you have your monthly levels, is what you want to do is you want to back it out. So let me reset the chart. Let me show you guys really quick. I'm gonna put little highlights on these, and the point of this is just to make it to where it's easily readable. Okay, I'm going to change that to blue, and I'm going to move it across the screen. And again, I'm doing everything like this. You're not required to do this by any means, but I will say that when you do begin to take your charting seriously like this, you'll make a lot more money trading. I promise you. So, personal suggestion, but not required. Okay, there we go. So I like to do that just so I know that anytime that I trade into a blue zone, it's going to be considered a monthly area. So check it out. Notice how I didn't even look at previous price action. I just drew it all based off of, once again, this key area there. All right. That yellow area is where we drew our monthly range from, which you can all see that. So whenever I did my technique that I just did with this, without even looking at previous price action data, I still accurately got my monthly support and resistance levels. And check it out, look how gnarly this is. When you look to the left, like, let's look at this whole area here for a second, okay? Notice how that monthly resistance area is accurate. See how accurate that is? It's pretty insane. See how even over here, the market, I didn't even look at this stuff. I just went based off of the technique that I just taught you guys very briefly how to do. And is what that does is it saves you time, energy, and it gives you the most important thing, accuracy. Notice the monthly support level. Look how accurate all the way even back here. So it's pretty wild. That's the sauce when it comes to these key levels. And let me tell you, having your key levels on your charts are the most important thing. If you do not have your key levels on your charts, honestly, like if you were to give me an analysis and you're like, yo, can you check this out? And I see that you don't have your key levels on there, I will literally tell you, I don't know what to tell you because you don't have your key levels on there. All right. So that's how you do your monthlies, which I like to have these actually labeled on the right, and I'm very strict about it. So I got to fix that very quickly because the next thing that I'm going to show you guys is mapping on your weekly levels, which is just as important as your monthlies. And I'm about to show you that right now because I like to have my weeklies on the left, just a personal preference. So let me go to the weekly chart now. All right, so we have our monthly levels mapped on. Obviously, you can go through and do the whole chart, but there's no reason to. You're only focused on, what's going on here and what's coming up next, right? So really just these three levels is all you need. And so let me pay attention here because this is extremely important how you end up getting your weekly key levels. So check this out. This is wild. This is just as crazy. If I actually take a Fibonacci, so let me take a fib, and I'm not drawing a fib on the chart like this to try to figure everything out. Is all I'm doing is I'm going to take a fib and I'm going to take it from this, see this line right here? I'm going to take it from that key level to this key level. All right, I'm not worried about what the chart's doing. I'm going to draw it from this area right here. So make sure that it's accurate. I'm going to drag it up to this line and make sure it's on the line, okay? So right there, if it'll move, it's being a pain in the butt. Either way, so right in there, I'm actually going to fix this just to make sure my accuracy is on point. And what I'm going to do is I'm going to take a horizontal line. I'm going to leave this fib on the chart. I'm going to make sure that I click the line on the 0.50 retracement level, okay? And watch this. If I go in here, change my settings, so that makes weekly support at 7,700, okay? So I'm going to round this to the nearest hundredth, 7,700, and I'm going to change the style, obviously, okay? And this is weekly support right now. All right. So let me delete that. And then all you want to do is you want to do the same thing down here. And I'm just going to do this just to prove a point that this really works. From there to here, you're going to do the same thing. Drop your line at the 0.50. And what that does is that shows the absolute middle range. And you'll notice how accurate this is. Watch. It's pretty crazy. And this one's going to be 73250. So we'll just leave it there. 73250, and make that right here 73250. All right. So we're pretty much done at this point. I'm going to do my last one right here just because it's up and coming stuff and I need to be aware of where this level's at just in case if I trade into it. So last thing, swear, and then we're done. We'll get into the fun stuff and this is the type of chart work that nobody wants to do. But this is the work that needs to be put in to successfully do the trading the right way. So this is going to be 82,250. So this is going to be weekly resistance, 82,250, weekly resistance. All right, 82,250. Okay. And then what I like to do last thing, like I said, I'm super weird about it. I'm sorry if it's taking forever, but if you really want to learn, you're paying attention right now. That's all I know. So I changed these to the left. I'm going to delete these Fibonacci levels because they're no longer important. And yeah. So let me go back to, let me reset the chart. So we got our monthlies, we got our weeklies. Okay, then we're good. So check this out. So I just marked on those levels. Look at this weekly without me looking at to the left for previous price action data. Look how accurate this weekly level was. Okay, all the way across the market, super accurate. Even up here, if you were to look at previous price action data to the left, super accurate. So before I go any further, does anybody have questions on that? And this is extremely important because one of the biggest tips I can give anybody is do not trade into key levels. And let me explain that very briefly. All right, so let's go to a 4-hour chart. Let's act like, you know, we're looking at AUD USD. And if you didn't have these key levels marked on, you would literally look at this chart right here and you go, oh man, AUD is still trending up. I could possibly buy it. Even if it pulls back to the trend line like this, like let me give you an example. If this came into play like this, okay, and we had the market maybe pull back to here, which would, you know, it might make lows here, hit on support in this. Would I buy right there? Absolutely not. Even though it could still bounce and go higher and it makes complete sense, would I buy right there? No. And the reason being is because I do not want to trade into this key level, because as what you'll notice if you look at price action on previous charts on different currency pairs, whatever it may be, you'll notice that whenever the market comes into these key levels, This is where a lot of volume comes into the market. Lots of aggressive things begin to happen. And it might go up real quick and then reject real hardcore. And then you're like, oh shit, what do I do? Right? Like it gets wild. So you don't want to be caught up in stuff like that. But this would be a perfect example of patience. And when it comes to looking at AUD/USD, if I was to look at this chart right now and you were to ask me, well, okay, so what's next? I would not trade this pair until we get a clean break of this level and then a retest back down to it. That is totally different, and that's okay. That is the type of trade executions that you want to be taking, all right? And once again, this is just an example on AUD/USD. You would do your chart markups the same way, finding the monthly range and everything else on the different currency pairs. It's all essentially the same thing. So let me take just a very, very quick second to go through this real quick. You have a video for this somewhere? I don't know if I do, to be completely honest. Where will this record? Yeah, I'm recording this right now, so it's no big deal. I'll post it in the GV group for you guys. So just to recap very, very, very quickly before I move forward to some other currency pairs and stuff, I based this entire analysis off of this monthly range. And the reason I did that was because all you do is you find an area where the market, on the monthly chart, you find an area where the market is holding within pretty much a box, okay? And it should be less than 1,000 pips. If it's more than 1,000 pips of a range, don't use that range. Like I said, this one would have actually been perfect. And check this out. If I actually took this box and moved it down here, see how perfectly that sits in that space? Isn't that wild? It's freaking crazy. When I learned this, I was like, oh my goodness, mind blown. Like, why didn't I learn this sooner, right? So yeah, it's pretty incredible, but that's a perfect example. Pretty wild. Either way, so that's how I would do that. But let's go have some fun on some other stuff. I just really wanted you guys to understand why I believe key levels are so important. And it's just, I think it's what separates professionals from the amateurs. And I'm just being completely honest. And then having patience whenever the market comes to those areas and knowing what to do with them and what not to do. So, and that's a whole nother lesson. And let's not draw on the screen. I know. You guys should be taking notes, not drawing on the screen. What are y'all doing, man? Jeez. All right, so let's go look at something else just to have some fun now, since we went through a major lesson right there. But once again, this is being recorded, so go back and go look at it somewhere else. So let me look at USD JAPY, all right? Personally, I'll trade kind of any currency pair. That's a question I get asked quite often is, well, what currency pair should I trade, blah, blah, blah. And let's use this as an example, all right, USD JAPY. So USD JAPY, looking at it, we rejected off monthly resistance here. We held the weekly, which was old weekly support around 112, right? And then last week we broke down and through it. So now looking forward, what are we paying attention to, right? When you look to price action on the left, you can see that this entire area acts as a support/resistance. The only thing that throws me off here, which last week you can see it looked like we closed a candle below that area, this little red one right here. That's cool and all, but what throws me off here is this really, really big daily green candle, okay? Is what that shows me is that price has actually, initiated a directional change. And then now we've pulled and we broke out of this old, like smaller time frame resistance, which is now acting as, in my opinion, support. And this isn't a signal, by the way, but personally, I'm expecting this to go back up to weekly resistance, actually get a full retest of weekly resistance, and then dropping to the next area of monthly support. So would I buy this right here? Personally, I don't think I would, but then again, it's a decently small risk for a really big reward. So when you think of it that way, it's good, but you don't want to execute on the daily chart. Do not ever execute on the daily chart. You want to draw your key levels on the 4-hour and the daily, okay? So something along the lines of that, and drop it down to the 4-hour, okay? And understand that we have weekly resistance here, which is once again why it's super important to draw on those key levels. Now, whenever you look at this, if I were to take it, let's drop it to a 2 hour really quick. I like to do a lot of charting on the 2 hour. People think it's weird, but I think it's great. So check this trend out, okay? From here, top down. Top down, that's what it looks like. All right, and you can see these candles right here. Let me highlight them for you. These candles all right there, let me make that red. Those indicate that's a clear breakout. Whenever you see lots of volatility push into the market, push up and through a very key area, such as a trend line like that, that's a very good sign that a directional change is coming. And another thing that I can see as to why this could potentially be a buy, check out the fib. We're still holding above the 61.8, really came down and tapped it right there. Let me make this bigger for you guys. So, okay, so everyone see that? So I pulled the Fibonacci from this area here to up here, and you can see that we did get a pullback to 61.8, and we're holding above the support level as well. So do I think this is a good buy? Yeah, this is a good buy. This would be pretty solid. The only thing that I'm halfway concerned with, so number one, is your counter trend line, okay? And we got a break to the downside, which kind of freaks me out just a little bit. Kind of makes me second guess it a little bit. Let me go to the 1 hour chart. All right, so see the counter trend, which we broke to the downside and retested, but we are still holding the support area. So is what I'd be waiting for to see here is a beginning push back up, and really I would like to see it back up in this area before considering taking long. But then you have to ask yourself, you know, are you jumping in a trade too early? Personally, I have a more conservative trading style, so I like to wait for the market to show me where it's going to go. And whenever I look at the 2 hour chart, just so you guys know, if you want to take a note, personally, I take my execution points off of the 2 hour chart. And one thing that I notice, which is why I would not buy here, even though I kind of see why you could, is see this moving average that I have on here? For those of you guys that are new, check this out. So check this one up here. See how the moving average, the blue is over the red, and then it crossed over? Is what that shows is that's a change in momentum, okay? So you can see the red is over the blue in this downtrend, and then here we have a cross, here we have a cross, and it looks like it's going to go up, which is when it goes up now. And then you have it pull back, and you can see now the red is back over the blue. And that kind of freaks me out too, because the red is over the blue, and you have a counter trend line break. So is what I'm saying is I would not look to buy this here. I'd be looking to sell because we have a counter trend line break and that as well. Whenever you get that moving average crossover, then you can typically enter in for a position. So really more than anything, I think this would be a good short, but at the same time, I don't even care to take it, if I'm being real. So don't take it if, I'm not giving any suggestions right now, if I'm being honest. So, and you could have a setup something along those lines, and really the market should make new lows. But I'm kind of concerned to the fact that this could pick up here. So I don't know. It's just in one of those weird spaces where it's indecisive, and when the market's indecisive, you don't typically want to be trading in that. You want to wait for the market to show you where it's going to go, and then once you get confirmations, then you will go in and you'll have solid trading setups. But yeah, if you're in the buy limit that I gave, yeah, keep holding it. 11.5 was the stop loss, which you can see is below those lows. So if you're in it for a buy, keep holding. My buy limit is still active, but I wouldn't get in it yet if you're not in it. But I wouldn't exit either. It's completely up to you guys. I mean, it's up to you. Yeah, that one's it's an iffy trade, because if you want to see it go to the buy side, the smart trader would do this, okay? Would wait for this to break out to the upside before entering. Does that make sense? Once you see that breakout of that counter trend, then you would want to enter for a long and then take it up to 112. So, which really I thought was going to go down, but the buy limit entered after I kind of realized that. So that's kind of my fault. But regardless, that would be the trading setup you'd really want to take on right there, which you can see is an 80 pip gain that you're looking to have, even with a later entry up here. Which I know that our original entry was 111.05. It's right in here. So like I said, if you still have it, keep holding it, but just understand stops go below that low down there. All right, so that's USD JPY, a little iffy. GBP JPY, let's go talk about that really quick. Okay, and once again, this is why it is mad important to have your key levels drawn on, all right? Because, what, 2 days ago, we had the market have a mad impulse to the upside here on the daily chart. So let's go to the 4-hour. And you can see, so we had this push up right here. From here to here, okay? And that was a 200 plus pip move. And this is exactly what I'm talking about. If you had your key levels drawn on, you would have known that the second it broke this major area right here, let me see, the second it broke this major area right here, you would have known that you could have taken this up another, you know, couple hundred pips. Easy, easy, easy. Yeah, 120 extra pips. And that you earn that type of confidence with your trading by understanding these key levels and stuff like that. If you were to ask me what's the most important thing, if I want to learn how to trade, what is the most important thing I need to know? I would tell you the number one thing is understanding how to accurately draw on your key levels and then what to do with the market once it gets there. Because honestly, trading in between, like, see, let's give an example. Weekly support is down here at 149.750, and then you have monthly resistance up around here at 154. You have to understand that when you're trading in the middle of this, you're at chance of, okay, where is this going to go, up or down? And then you need to zone in your analysis, right, and understand different technical principles. But overall, if you understand these key levels, you can make money in this market, because check it out, is all you got to do is go to the higher time frames, like weekly and stuff. Like, let's just stay here at the daily for a second. You look at this and you go, oh, look at this. The market's making what? Higher highs and higher lows. Up, down, up, down, up. Oh, okay, that makes more sense. It can literally be that simple when you understand what you're doing. All right. So keep that in mind. So let's look at something else. Let's look at USD CAD, because I've been watching this damn thing for way too long now. So USD CAD, let me go to so on the daily chart, let me get rid of all this real quick. I'm going to get rid of all of it real quick. Okay, I'm actually going to leave that stuff. So on the daily chart, obviously you can see we have monthly, which we've broken to the downside, which is now monthly resistance, was monthly support, monthly resistance at 1.247 area. So we are underneath monthly resistance. That's number one. Okay, so when we go down to the 4-hour chart, you can see how the market is hanging out, closing candles under the monthly resistance continually, time and time again, right? So this whole move here, which let me zoom this in. Okay, this whole area, I know to the normal person is scary looking, but if you understand what you're doing, this is so easy. This is the easiest trade setup ever. This just all comes down to patience. Is all you got to do is take this move here. This is what's called an AB extension. All right, take it from the very top of this move here, because this is all considered to be one move, to the bottom there. Take this and move it from this general area, and you'll get, you should get the next leg to the downside somewhere in there, and that should typically be your downside target. So is all I'm waiting to see now is if you're still holding the short position on USD CAD, which you should be, you should just be expecting in this market to break this. Let me get rid of this box real quick. Actually, I'm gonna leave it. You should be waiting the market to break this yellow little support area here, which obviously this is your lowest low that you're also need to be paying attention to. And you just want to see this go here next. And is what you can actually do is check this out. This is where Fibonacci extensions come in, which, by the way, before I go any further, I know that I'm using a lot of really technical terms, but here's my honest advice, guys. If you're on these calls, if you're on these GV training calls that either myself or David do, you should understand everything I'm talking about. You should. And the reason being is because we have IML Academy and stuff like that. Like, if you're on this call and you have not gone through IML Academy front to back and you don't understand what I'm saying and you're missing out on the knowledge that I'm giving, I don't even feel sorry for you. Like, I'm being completely honest. Like, you guys have so many resources. I get people all the time, well, what's a fib and all this. Don't ask me what a fib, like, I'm just being honest. Like, don't ask me what a Fibonacci is, because you have every resource in the world. You don't need anyone to tell you what a Fibonacci is. You have IML Academy to go through and eat this stuff up, right? But either way, done with that. So check this out. These are your Fibonacci extensions. And how crazy is this? This is your, so you have A to B. So let me back up for just a second. This move here, which was your A to B leg, right there from top to bottom, okay? This is your B to C is this move, and then you have C to D. So this, from this point here to here, let me make this a different color. That's C to D, and then, I'm sorry, that's B to C, and then this here is C to D. Okay, that's what we're looking for. That's what we're looking to make money on, is the C to D move, all right? And notice how the C to D move lines up perfectly with the 1.27 Fibonacci extension, which tells us that's a good target point. But more importantly, the further downside target really should be weekly support. But once again, you have to remember, like I said at the beginning of this video, that, or this call, that 1.23 is probably going to be a psychological level, because that is your rounded number. It's an even number, right? Well, it's an odd number. 23 is an odd number, but it is in the market. It's a base number, 1.23 flat. All right, so that would be your first target, 1.23. Simple as that. And this just comes down to all the patience. That is a 120 pip move. And I swear to God, if it breaks this to the downside, it will go there, no questions asked, and it won't waste any time doing it. You just have to have the patience to catch moves like that. But those are the types of moves that professionals look to make, not 10 pips here, 20 pips there, not even 30 pips is still considered a scalp. Let's be real. But so does that make sense? Does the USD CAD setup make sense? And I know this looks really messy, and the only reason this looks messy like it does is because this right here, this giant candle, all right, that was CAD interest rates. So you had some news in that mix as well, which is why it made it a little crazy. But regardless, it didn't affect the overall analysis at all, okay? Because notice where the candles closed. That's all that matters, is where these candles closed. So let me go through the chat very briefly. Let's see. Okay, cool. All right. So yeah, that's that. By the way, if you guys have any questions or anything, drop them in the comments, and by all means, feel free to let me know. Let's see, what's another currency pair? I usually just trade base currency pairs. So like GBP AUD. This is a cross that I like to trade GBP AUD. And let's talk about this really quick. All right, I talked about this tonight at a meeting that I was at. So let's jump into this. Okay, I'm going to reset this chart. Let's go to a lower time frame. Let's go to 1 hour real quick. Which, ooh, I don't have my monthly levels on that. Yeah, I'm not even going to mess with this with you guys because I don't have my monthly levels on there. I actually deleted my monthly levels off this one so I could show somebody the thing. So I have to go through and redo them, and I don't want to redo that right now on this call because it'll take forever. Let's see. Let's go to Euro JPY. I think I have my levels marked on for this. Yes, I think I do. I might not. I don't know. Yeah, okay, I do. So dope. So let's talk about this one. So I know that what's it called? I know Swipe Trades gave out a sell here, and personally, I'm not like, I'll just be real, not a fan of the sell here. And that doesn't mean that the sell is wrong. That doesn't mean that I'm right. It's just my own personal analysis. So don't think that I'm like, yo, get out of Swipe. Like, if you're in that sell and you trust Swipe Trades and that's what you're, willing to risk a piece of your account on, then by all means, keep your sell. I'm not telling you anything before we move any further, but I will tell you that I'll give you my honest opinion. So that's what we're about to do. All right. So let me go to the daily chart. And obviously right off the bat, you can see this market was trending up for a long time. We held weekly support for forever. Okay. And then we broke out to the upside, which was monthly resistance. But once again, like I said, you have to be careful when you're trading around these key areas, because this is where a lot of the market volatility begins to pick up and crap like this goes down. That would have bit you in the butt if you don't know what you're doing. All right. So super, super careful with that. One thing that I would say with this is, obviously we are back up here, but the important thing is that, we're paying attention to market structures and things like that. So is what I would like to do is I like to, like I said, I have a conservative trading style, so I don't like to just jump in anything. I always like to look at what, let's say Swipe was to give out a trade. Like I would like to see what they see, right? So first, right off the bat, I'm going to take this up as a trend line, and you can see that, it kind of looks like it's beginning to wedge itself out of that. But I would not, the reason why I wouldn't sell this here, let me go to the lower time frame. So the reason I wouldn't sell it is because we don't have a moving average crossover. Simple. Until this chart pushes itself clean out and we close candles out here, and this moving average crosses over, the red moving average crosses over the blue, then I will consider shorting this back down to the old monthly support, which was monthly resistance. Okay, but that's only an 80 pip move, and then you have to ask yourself, is that move worth me like risking a bit of my account for that? Because then again, you're trading into a key level. Does that make sense? So is what the smart person would do, even if this was to break out, personally, like, yeah, you can go ahead and short it if you want, but it's probably going to go here, and I guarantee, like, personally, I don't think it's going to go much lower. I just don't. It'll end up going back up and probably making new highs like it's continued to do over and over and over. It's always important to pay attention to what the market's been doing time and time again. And when we look at the daily chart and we back this thing out, this is not a downtrending market. So do you really want to sell in it? That's the thing you have to ask yourself. It's an uptrending market. And obviously, whenever this market was in the sideways range, that's a little bit different. But you have to understand how to trade in the sideways range to be able to be in there doing that. But up here, I wouldn't be looking to sell personally. I'm looking for new highs to form continually, time and time again. And you can see that new highs have not formed yet. This is the high, and this does not make a new high. This is invalid. We're looking for new highs to form. Simple as that. Push up, pull back, new high. All right, so I don't know. That's just my outlook. I personally don't agree with the swipe trade that was given out tonight. Does that mean it's wrong? No, but that's just my personal outlook on Euro JPY. That doesn't mean I'd buy it either. Let me just say that. Like, just because I don't think this is going to go down, that does not mean I want to get in here and buy. Okay, you have to stay super clear with everything. So, like Taz asks, any trades to get in now? What moving averages do I use? Everyone's asking for the MAs. The MAs are a secret. No, I'm playing. No, I'll give them to y'all real quick. Let me see. So the moving averages exposed. Right there. There you go. So it's a regular moving average, and it's a 21 period, and it's red. The exponential moving average is an 8 period, and it's blue. All right. So I'm going to leave that there I'm going to leave that there. You guys can take the note on it. Take note on it. Okay. Let's look at something else. Let's look at you. No, I don't trade USD CHF. Pound USD. So someone asked if I ever scalped. Personally, I'm not into scalping. It's just a personal preference. Am I saying that you can't scalp? No, not at all. Just for me personally, scalping is a really, really emotional game that I don't like to play. Personally, I like to just read basic raw price action on the higher time frames, which are 10 times more clear than the lower time frames are. So that's just, scalping is just not me. Everyone has their own style of doing things for sure, but yeah, scalping's not me. Hardcore swing trading either. Everyone thinks like, a 200 pip move or something is swing trading. Like, I think that's like, I would consider it more intraday. So that's more my trading style. Like I would say that I hold the trade for an average of anywhere from, maybe like 10 hours to maybe like 3 days. I would say that's like somewhere in there is probably the median average. But with pound USD, so let's look at this. Let me get rid of this because it's no longer valid. This trend line still is though. So obviously we're heading on up aggressively, and honestly it's probably just going to keep going up into monthly resistance up here at 1.4, which once again is a psychological level that everyone needs to pay attention to. So pound USD, I would not mess with this thing right now. If you're not already in a buy position, I would not mess with it. That's just me personally. Pound is one of my favorite pairs to trade for sure, but I'm actually not in it right now. Let me reset this. Let me see. Let me go to the 1 hour. Okay. And if you'll notice, so this was the old trend, which looked like it kind of broke, but it really didn't, right? We just continued upwards. So this would be more so the trend that I'm paying attention to. And really, this is such a sharp move. Don't even trust a trend line in a situation like this. Not really. Because if this pulls back, we're not really looking to sell. Like you don't want to be selling in an aggressive pushing up market right here, just going, oh, I think I'm going to catch a reversal point just because you think there's a reversal point. You just don't want to do some stuff like that. Me personally, I'm going to talk for myself. I don't want to personally do stuff like that because the market can just keep pushing up against you and you just get screwed. So yeah, I wouldn't mess with pound. Don't mess with pound USD until you get up into this 140 area and you begin to see maybe some price action that shows you that the market's going to potentially turn around pretty soon. But other than that, no, don't mess with it. Let's see. So Euro, I don't think I have my levels drawn on for Euro USD. I'm slacking, guys. I'm sorry. Oh yeah, I might. Let me see. Let me reset this on a monthly. Okay, yeah, I do. Dope. So let me go to the 4 hour. And then after this, I'll do like a quick Q&A and then we'll go ahead and shut it down for the night or whatever. So check this out. This was just I'm going to leave this because this is still my analysis. Not saying that it's going to go up or down. I don't know. It might just keep going up though. So let me just get rid of this real quick actually. So with this is pretty simple, I think. So number one, you can see we did have a moving average crossover here on the 4 hour, but look, we're crossing over now to the upside. So this is where I like to do my execution is on the 2 hour. And honestly, this is probably a perfect trade setup for you guys to go ahead and get in if y'all wanted to. Hell yeah, actually. So here we go. If you guys want a trade setup, here's one, Euro USD, buy it. It can be that simple. You don't want to just jump in like right wherever. Let me check it real quick, like make sure all the levels are good and everything else. So obviously on a lower time frame, you can see that there's some support right in there. Overall though, the counter trend does look like it is absolutely broken. We have okay, yeah, this looks great actually. So see this push up, this whole push up here, same thing. We're gonna have a push up here, which is a good target first take profit area. So if you wanted to hop in, you absolutely could. Long position, say that you just took it there, stops go below the low. So you'll risk 50. This is a 1-to-1 type risk reward ratio. But really, I don't think it's just going to stop there. I think it's going to make new highs. If we're not going to get a pullback, which I think we would have already had one by now, you're just going to take it up to weekly resistance. That's what I'm going to do. In fact, I'm going to give that right now. I'll even give it in the group. Go ahead and buy Euro USD. Stops go down here at 1.221 and take profit comes up here to 1.239 is what I would do. Okay. So it can be that simple when you understand these key levels, the way the market is trending, which we all know Euro USD is trending very much so to the upside, simple moving average crossover, counter trend line break. Like there's multiple different reasons why, in my opinion, this is a buy. And typically also for you guys to remember is that after you have this very hardcore push up, which watch this is probably going to be pretty wild. So we're going to call this all one move. Okay, so this is one move. Now let's just say that this is our low and this is our next move. It's A to whatever extension. So you can see it'll range all the way up here. In fact, I guarantee it'll probably blow through this weekly resistance. I know that the US dollar is super heavy right now. If you understand the DXY or anything like that, you'll know that it's pretty heavy. Let's check a fib extension as well to see where we can get a profit target. So let's pull a Fibonacci from, let me zoom this in. So we're going to pull a fib from this high right here to the low, which is going to be right in here. Okay. So like that. And you can see 1.6, this is in between the 1.27 and 1.618. So a safe take profit could be here at 1.27. Extend it across. Your other one could be up there at weekly resistance. Either way, I think it's a great spot to get in a buy and ride it out and understand that in my opinion, that's going to be a solid setup. So does everyone understand why I see that on the long end? Everyone get it? And I hope this call definitely helped you guys. Let me see. Let me roll through the chat and anything. Copy and paste the box. Yo, Kyle, like I would, but dude, it takes so long. Just go through. I'm gonna post this video on my YouTube, so that way you guys can go through it and watch. But yeah, so that way you can go through it and understand how to do it. Just watch the video over and over and over again. Study it. It'll help you a ton. But Tim asked, how long do your trades normally run? Honestly, like I said, anywhere from like 10 hours. Actually, I'll probably say like anywhere from like 6 hours to upwards of a couple of days. Like I'm the type of guy, I will wait until my trade hits my profit target 9 times out of 10. Which I would advise anybody. You have to understand, like when you have a trade set up, like it's all trading is being able to trust your own analysis. That's it. It's all it comes down to. If you can trust your own analysis, you will be a good trader. Simple. Trust yourself. Any other questions or anything like that? David, are you actually on the call? Let me see if David's on. Let's see. I don't even know if he is. He might be busy. Yeah, I don't think he is. Either way, shoot, let's see. Last thing. Maximus asked how long I've been trading. I've been trading like coming up on 4 years. In about 4 years, something like that. Yeah, other than that, guys, I'm gonna go ahead and hop off. Like I said, this is recorded, so you guys will have it. So study it. Hopefully it helped you guys. And y'all have me on Facebook, I think, or Instagram or anything like that, which I'll drop that in here. You guys can follow me and ask me questions on there. I always respond. So I'll talk to you guys later and let me know if I can help. Peace.